Okay, here is our chart from yesterday. Take a look and see what happened. As I was saying yesterday, I was thinking that the price would probably move up and bounce off of the top line of the trend channel and then head down. In fact, we can see that the price just moved sideways and then suddenly fell through the floor. That is a 40-cent move there, which is quite a lot in the silver market. 40 cents figures like this. If you put up $100 margin, that would allow you to purchase $10,000 worth of silver. $10,000 worth of silver is about 700 ounces. 700 ounces times a 40-cent move, 700 times 40 cents is $280. So $280 potential profit on a initial $100 margin is just amazing. That's almost 300% in just 4 or 8 hours. Now, is it possible to make that kind of money in Forex trading? Well, it's certainly possible, but it's not very easy. Did I make that kind of money last night? No, absolutely not. I just slept through the night. Had I been awake, then I probably would have just grabbed a little piece of it. That's much more likely when you're trading and you see these opportunities. You jump in, you take a little piece, you take some money, and then you get out and you're happy with whatever you get. So don't be thinking that each one of these big moves here you're going to be alerted exactly when to buy and sell. It doesn't happen that way, and there's a lot of uncertainty, and it takes a lot of brains and balls to know when to get in and when to get out. But it's very exciting. The potential is there, and it does happen. So let's talk about the next big breakout that we're waiting on. That's the beauty of these breakouts, is that you can see them coming hours and days ahead. Now here's our trend channel, our big old trend channel in the 4-hour chart. This is a very well established trend channel. We got lots of bounces on the top and on the bottom. When this thing breaks out of the channel, it's going to be a huge opportunity, a big potential money maker for a lot of people. Now, will it break out to the top or to the bottom? We really don't know. But I will tell you this, my experience in these kinds of 4-hour trend channels that take a long time to form, there's usually a whipsaw. Whipsaw is when it breaks out one way and you think that the major move is going to be happening in that direction, but very early on it turns around, goes back the other way, and ends up breaking out in the opposite direction. So that's what I think is most likely to happen. We got a little bit more zigzagging to go here in this chart. See over here? We can go up and down and up, and it's going to be a little while longer before those two lines, those two purple lines, converge. But when they do, it's going to be a huge opportunity. So that's what I'm waiting for. Hopefully I'll be able to stay awake and I'll be able to make some money. Of course, sometimes these things happen during the U.S. trading session. Then I'm awake anyway. Before I go, let me show you one more thing. Last night, like I said, I slept through that whole move. But let's say that I was going to stay awake and I was going to try to trade that move. What I would have done is took a closer look at a shorter term chart, let's say a 30-minute chart. Here's a 30-minute chart. Look at this. Now this is a big down trend channel there, and then we have a shorter, narrower up trend channel. And watch what happens here. The top line of the downtrend channel and the bottom line of the uptrend channel form a narrowing triangle. And as that got narrower and narrower, the price just bounced back and forth, and finally it broke out. And that's what we're always looking for, the breakout. Breakouts are the best time to trade. That's when there is the lowest amount of risk. The market is moving in an obvious direction, and we don't get caught in any kind of trending market. You see over here this area where the market was just going up and down and it wasn't doing anything? That would be the very worst time to trade. You don't want to be trading in a flat market. But when the market's moving and it's clear what direction the market is going, you can almost always find a good low-risk trade. So that's another point to remember, that when you're serious about trading and you want to get in on the exact moment, you start with a long-term chart like this 4-hour chart. It's called the 4-hour chart because each one of the candles represents 4 hours of trading activity. Then you zoom in on a shorter time frame like a 30-minute chart. Now this 30-minute chart here, notice that on the 4-hour chart we see one big candle going down in 4 hours, but when we look on the 30-minute chart, we can see that same trading in 4 candles. 4 hours, 30 minutes, 4 candles. So here it is, and I'll highlight it for you. It's goes like this. See, there's the 4 candles approximately. So remember, you start with a long time frame and then you zoom in on a shorter time frame for better timing. And that's about it for today. Oh, wait, I made a mistake. There are 8 30-minute candles in one 4-hour candle. Okay, before I go, I'm going to read you a short little disclaimer that I wrote, and I'll probably be reading this to you over and over. It's kind of like a legal thing all analysts do. These days, all Forex brokers give away free demo accounts. Anybody can get them. They're free. This educational video is done in real time with play money. My number 1 rule: never trade with real money until you have first traded with a demo account and consistently made a profit using your broker's play money. When you trade with play money, there is never a risk of loss. When you trade with real money, there is not only a risk of loss, but there is always a risk of getting totally wiped out. Never trade with more money than you can afford to lose. Start with a free demo account, learn the ropes.